What is the charm of pocket option? Is that anyone can understand it from scratch just in 20 minutes. What can you expect? First, I will explain where and how profit comes from. Then we will set up the entire interface and you will understand how to manage it. After that comes the most important part, the strategy. When to enter a trade, under what conditions, and what amount to use in just 20 minutes. But you will get a maximum benefit. Let's evaluate the result of those who have already done this. So to start, let's open a position, for example, for $10 for 1 minute on an upward trend. I found a good situation for entry here. This position will help you understand what the trading process on pocket option looks like, and you will simultaneously help determine how payouts are formed during positions. So the payout percentage is determined by the broker and it varies for each currency pair. For example, I have 92% here. This means that if my trade closes in profit, I will receive $19 on the balance after it's completed. The net profit will be 9.2%. I think that's clear. Let's wait for the position to close and see how $10 turns into almost $20 in just 1 minute. Great, my balance is already $109.20. With just one trade, I added 9% net profit to my deposit. So, to choose the most profitable asset, you need to go to the section in the upper left corner. Here we display all currency pairs. And to the right of them, we see the payout percentage that is active for the respective currency pair. On average, it ranges from 50% to 92%. Sometimes it can be less, sometimes more. I recommend opening trades specifically on those currency pairs that have a good payout percentage, at least above 70%. However, that's not the most important thing. What matters is the strategy you choose. If the strategy is good, you will earn even with small percentages. If the strategy is poor, then sorry, but you won't see any profits. By the way, very soon in this video, we will start discussing a good and at the same time simple strategy. So watch carefully so you don't miss any important details. Traders on pocket option earn by opening positions. However, it is very important to open them not randomly. This is where technical analysis of the chart helps us. Technical analysis involves looking for certain patterns in the market that help determine which direction the price will go over a specific period of time. For this, we need a good strategy that I will discuss during trading. Let me now open another trade for $10 on an upward trend. I see another decent situation for entry here. Meanwhile, I recommend setting up on our interface. To set up the interface, we only need a few things. First, in the upper left corner, right next to the list of currency pairs, we go to this tab. Here, pay attention. You should have the correct type of chart selected, namely, Japanese candlesticks. Additionally, we need a time frame. Personally, I have it set to 1 minute. This is the most common used time frame for my strategy. Once you have set this up, you can add an indicator. However, we will discuss that in more detail later. Understanding the simplest and most basic things is extremely important for our strategy as well. That's why I would like to explain why it's so important to choose the candlestick chart type and why it's essential to select the right time frame. By the way, my trade closed in profit and my balance is now $117. However, let's go step by step. The candlestick chart type is extremely important because candles help us determine how the price of an asset has changed over a certain period of time. The chart shows the history of price movement. Candles shows the same thing, but depending on selected interval. I have a 1 minute time frame set, so one candle on the chart shows how the price changed over 1 minute. Understanding how the candle has changed over a specific period of time simultaneously gives insight who is stronger at that moment, buyers or sellers. This, in turn, helps us determine in which direction the price will move. The linear type of chart does not provide us, with this understanding. It simply shows the regular movement of the price while missing out on a wealth of information. That's why the candlestick chart types is more understandable and professional. In addition to candles, there are also bars and Heikin Ashi, but I do not recommend using them since they provide essentially the same information as candles but are much harder to interpret. Moreover, the candlestick chart type is the most popular choice among traders. Even if you search for trading chart in your browser, you will almost often be shown an image with a candlestick chart. So in a very short time, we have already learned how to open trades, how payout percentages work, and in addition, we have figured out the type of chart. Let's move on to the strategy. To analyze the chart in more detail, we will need an indicator. On Pocket Option, you can add indicators. That's why we go to the indicator section located right next to our chart type section. The chart type selection. We enter the indicator section, and I would like to add an indicator called CCI. This is generally a simple indicator that is very understandable and at the same time very effective. Now that we have figured out how to add an indicator, let's move on to trading. During this process, you will learn how to use it. So working with the CCI indicator is very straightforward. We combine the indicator's readings with the readings from the chart. I will now open a trade for $10 for 1 minute on an upward trend. Why did I do this? It's simple. I saw a good signal from the indicator. First, it's important to understand how the indicator works. It shows us price movement within a certain range. This range has two boundaries. The upper one is the overbought level, and the lower one is the oversold level. If the price enters the oversold level, it often indicates that the price will rise again. Right here, the price entered the oversold level, so I opened a trade for an upward movement. In this trade, I shared some very simple rules using CCI, but this is just the beginning. That's why I recommend watching the video carefully and all that way through, because trading solely based on the indicator would be foolish. It is very important to have an understanding of confirming factors that we see on the chart. I will discuss, this alongside trading. By the way, another trade has already closed in profit. My balance is now $126. Let's move on. We have already learned how to add an indicator and even got acquainted with its basic principles of operation. However, I haven't touched on a very important topic regarding the choice of expiration time. For each of our trades, we have a specific time, and it is crucial to choose it correctly. Our strategy involves quick entries and exits from trades. Therefore, our time should be short as well. Personally, I use 1 minute, and therefore I recommend you to use 1 minute too. This time frame matches our time frame, which is also just 1 minute. So I found a good situation for trading. I will open a trade for $10 for a dollar movement for 1 minute. At the same time, another very important element is added to our strategy: confirming factors. We already know that the price was at the upper boundary on the indicator, namely at the overbought level, which indicates to me that the price will decrease. But at the same time, if we look at the chart, the price is at a certain level of resistance. Moreover, this level is relatively strong. There have been a significant number of retracement movements from it, indicating the strength of this level. And if we cross-reference this with the fact that the price is near the overbought level, it creates a perfect situation for an entry point. Now, our strategy has two inseparably linked elements: support and resistance level, and overbought and oversold levels on our indicator. So the trade closed confidently in profit, and this is all thanks to clear execution. So I see an interesting situation for trading. Right now, I see that the price is at the oversold level on our indicator, and simultaneously, the price is within the support level. All of this indicates to me that the price will rise. So I wait, for the last candle to close and immediately open a position. So the price sharply decreased and came to another stronger support level. For your strategy to be more effective, it is important to visually represent what you see on the chart. For this purpose, Pocket Option has graphically elements that they will help you highlight everything necessary. Here you can add horizontal lines, vertical lines, rays, trend lines, Fibonacci levels. But I recommend highlighting levels using this kind of area. We can move and change in various ways, which helps us clearly, delineate the level. For example, in this way, I highlighted the level and from it I entered. It is very important to enter when the price is within the level. And these tools also greatly assist with that. I think there is absolutely no doubt that, there is a very convenient, especially when you can do it without using third-party tools. By the way, the trade closing profit, and if you want to remove a tool, just click on it and hit the delete button. That way, we got acquainted with how to draw levels without using additional applications, using only our native pocket option. So I see another good situation and immediately open a position for $10 for an upward movement. Well, let's see what we have here. First of all, the price is outside the oversold level, which tells me that the price will likely rise. At the same time, I can highlight the nearest support level located at this area. And right inside it, we formed a situation from which we entered. By the way, guys, a month ago, I started my live group where I explain each trade in detail with text and screenshots just like in this video. You can simply copy trades based on signals or also learn from real examples. Follow the link in the first comment. I'm waiting for you there. So the trade closed in profit again. But in the next positions, we will already resort to using additional tools that will further improve our strategy and simultaneously simplify your work on pocket option. So another important element is added to our strategy: candlestick patterns. Now the strategy looks like this. Let's imagine we have a certain level of resistance. The price has approached it. At the same time, on the indicator, the price is at the overbought level. It seems like a great situation for an entry point. However, now we must also pay attention to candlestick patterns. For example, in the situation when the price enters the level, a candlestick pattern formed with a long upper shadow and a small body at the bottom. It tells me about a price decrease. And as soon as we see the candlestick pattern, we can open a position. As you can see, this works wonderfully. It's also very important to understand what candlestick patterns exist and how they are formed directly on the chart. You will see this in these trades. So I see a good situation for trading. I will wait for the full closure of the candle, since the candles are now a very important factor for our strategy. So the candle closed perfectly. 1 minute, $10 for an upward movement. Now let's look at the chart. Firstly, on our indicator, we saw a signal that the price is below the oversold level on our indicator, which indicates a price increase. Secondly, the price is within the support level, from which there have already been a certain number of retracement movements, the last of which was very impulsive and long, indicating the strength of this level. In addition, we form a candlestick pattern that we will now examine in detail. So if we zoom in our chart, we can see the formation of a bullish Doji candlestick pattern that looks like this. This is a candle with a long shadow at the bottom and a small body at the top. The shadow should be at least twice the size of the body for the pattern to be considered correct. It indicates a strong buyer within the area who will push the price higher. By the way, while I was explaining the trade, has already closed in profit, and look at what a good movement I managed to catch in the end. My balance is already $160, and we won't stop here. In the next trades, I hope we will analyze other types of patterns and sooner or later touch upon the topic of risk management. This is also extremely important, especially for good performance in trading. So I see another interesting situation and open a position for $10, 1 minute up. Let's take a closer look. So it's pretty simple. The price is near the oversold level on the CCI indicator, which tells me that the price will rise. In addition, the price was at this level. Simultaneously, we formed bullish and engulfing patterns. There are two of them, this one and this one. Let's zoom it on, on the chart and again, take a closer look at them. Each of these patterns has large shadows at the bottom. They are at least twice the size of the body. Both indicates a price increase. So far among the patterns, we have classic dojis and indecisive candles. But I hope this, this is not all. Let's move on. Right now, I see an interesting situation forming. The price is near level and at the same time, we have an interesting candlestick pattern form. So I open a position. Let's zoom it on the chart. So this pattern is called bullish engulfing. It is a two candle pattern where the second green candle completely engulfs the previous red candle, touching its maximum shadow. This is roughly how this pattern looks. In addition, there is also a bearish engulfing pattern. It looks like this, meaning the second red candle completely engulfs the previous green candle, also touching its maximum shadow. These patterns occur less frequently compared to dojis and indecisive candles, but they are also worth considering. With that being said, we have already learned to use candlestick patterns in trading and have combined them with our strategy. So before opening the final trade for today, let's finally talk about risk management. A common mistake among many traders is greed and fear. That's why it's recommended to set a plan in advance regarding the trade amount, maximum loss for the day, and maximum profit for the day. Personally, I recommend using no more than 10% of your deposit on a single trade, as well as no more than 3 consecutive losses. So I'm opening the final trade for today at $10 for 1 minute. I think everything is clear here. The price is near the lower boundary on the indicator. In addition, the price was within the bounds of the support level. And at the same time, we had a candlestick pattern formed, an indecisive candle. Now let's discuss a complete action plan for entering a trade. First, we find on the chart the moment when the price is as close as possible to the support or resistance level. Second, at the same time, the price should be as close as possible to the overbought or oversold level. Third, our task is to find at least one candlestick pattern as confirmation. After that, we can calmly open the position using our risk management. Well, the trade closed in profit. Let's summarize. In these 20 minutes, we not only traded but fully studied the broker pocket option. Moreover, we explored not only the regular interface but also touched upon important topics regarding trading as whole and the structure of the chart. We also studied a complete trading strategy that might be useful for you. Today, I managed to earn over $87 trading on pocket option, and that's a great result. Thank you all for watching. Don't forget to join my Telegram channel. You have the link in the comments. And goodbye.